Hey everybody, it is Thursday and it is time for your Thursday Thought, and my thought for you on this fine Thursday is interest rates. Now I have to be careful talking about interest rates because I'm not a licensed mortgage broker or a licensed lender, so I'm going to be kind of reading a few things from you, or to you, from the CNBC article, and then kind of just share a few conversations that I've had over the past week to kind of give you an update on interest rates. Interest rates seem to be the talk of the town, or at least the talk of the industry, over the past few weeks because they have been climbing, as many of you may well be aware. So, the article, this article was written on March 22nd, so already about 8 or 9 days old, and the key points of the article are the average rate on a 30-year fixed mortgage hit 4.72% on Tuesday, moving 26 basis points higher than just last Friday, but again, this was written 8 days ago. As a result of the recent spike in rates, economists are now lowering their home sales forecast for this year, and most estimates at the end of 2021 had the 30-year mortgage rate hitting 4.5% by the end of 2022. But the war in Ukraine, rising oil prices, and inflation have all lit a fire under interest rates. And so they expect it to be 4.5% by the end, and here we are ending March with a 4.72. I just got off the phone with a lender yesterday who was sharing with me that, yeah, they've been, for even like golden borrowers, people who have great credit scores and a 20% down conventional loan products, they're locking them yesterday at 4.75. And so it's certainly something to kind of be aware about. Just a couple of quotes from a couple of the people that were interviewed for the article. This is, quote, rates have a small chance to top out before hitting 5%, and a good chance of topping out before hitting 6%, said Matthew Graham, Chief Operating Officer at Mortgage News Dailies. Quote, it is a rapidly moving target in this environment, where we legitimately and unexpectedly find ourselves needing to be concerned with inflation for the first time since the 1980s. And so basically what he's saying is that, hey, there's a small chance that we're not going to bust 5, but there's a good chance that we're going to be topping out in the high 5s towards the end of the year. Then Lawrence Yun, the chief economist from the National Association of Realtors, now says that he expects the rates to hover around 4.5% this year after previously predicting it would stay at 4%. NAR's latest official prediction is for sales to drop 3% in 2022, but Yun now says he expects they will fall 6 to 8%. So now NAR has not officially updated their forecast, but that's what Lawrence Yun had said. So ultimately, as interest rates go up, of course, that means that buyers' purchasing power goes down. I won't get into the exact specifics of what a rate will do because it's obviously going to be dependent on lots of things in your loan, whether there's mortgage insurance involved, what the price point is, things along those lines. But ultimately, we, as a general rule of thumb, of course, that when the interest rates go up, a buyer's purchasing power goes down. So some buyers who haven't been able to purchase yet, who are shopping now, and let's just say a $400,000 price range, if they don't buy soon and interest rates continue to creep up, as interest rates creep up, their affordability goes down, and they'll be looking at a 375 and a 350 and a 325, and the difference between a home at 325 and a home at 400 can be pretty drastic. So buyers are going to have to kind of shape their expectations a little bit around rising interest rates, and then talk to your lender and get some good advice from them as far as when to lock the interest rates or what the expectations are over the next week or so as you get close to that buying spot. If I can help you in any way, shape, or form. Actually, I want to say two more things. Historically, over the last 40 years, interest rates have been on an average 7.81%. So, I know many people who bought their first homes at 12, 14, 16% back in the 80s. And so, historically speaking, we're still low. But as a nation, we've been kind of drunk on these low interest rates for a long time. So it's certainly going to feel like a lot as we leap up there to kind of get the inflation under control. It's certainly going to feel we're going to take a hard hit when we're buying houses. However, it's still historically low, and if you look at asset appreciation protecting you from inflation and also the inflation rate versus the interest rate, you can still think about it with a high financial IQ, and you can see the benefit in purchasing a home and protecting yourself, hedging yourself from inflation, and still securing what's considered historically low, below historical averages, interest rates. So if I can be of assistance to you in any way, shape, or form, please let me know. Please reach out. Comment down below. We'll start a conversation going about this. Thanks for tuning in to this week's Thursday Thought, and we'll see you next week on next week's Thursday Thought. Ciao.